Okay, let's unpack this. Imagine you are like packing for the trip of a lifetime, right? You have the perfectly curated itinerary, the news-canceling headphones, the really comfortable walking
The
shoes.
absolute essentials.
Right, the essentials. But traveling with the wrong bank account is exactly like walking around with a slow, invisible leak in your suitcase.
Oh, I love that analogy. That's spot on.
You don't even realize you're bleeding money until you're standing at a cash-only gelato stand in Rome.
Yeah.
You reach into your pocket, and your daily budget is just inexplicably empty.
And you're just left standing there.
Exactly, because right now, the average out-of-network ATM fee is pushing almost $5.
Which is just wild to think about.
It's crazy. And foreign transaction fees. They are quietly skimming up to 3% off every single gelato, train ticket, and museum pass you buy.
Yeah, it adds up so fast.
So today, we are fixing that leak. We are doing a deep dive into the absolute essentials of modern travel banking. We've got a really comprehensive 2026 guide here, and our mission today is to look at exactly how to protect your travel budget so your money actually goes toward your experiences and not toward, well, a bank's administrative overhead.
It is such a crucial topic, and that suitcase analogy is the perfect way to look at it, because the reality of global finance today is that being financially prepared for a trip is just as critical as packing your passport.
Totally.
I mean, you would never board an international flight without ensuring your visa was approved, right? Yet, so many of us board those same flights completely unaware that the everyday checking account we have used for, 10 years is fundamentally designed to penalize us the second we cross a border.
Wow, designed to penalize us.
It really is. This is not just about saving a few pennies here and there. It is about understanding the mechanics of how money moves globally so you can actually take control of your financial security.
Right. So before we can even talk about the fun stuff, like how your checking account can actually generate shiny airline miles, we have to talk about defense.
Yep. Defense first.
We have to stop the bleeding. Let's look at the actual mechanics of these fees because honestly, the numbers for 2026 are tough to swallow. Like we mentioned, the average out-of-network ATM fee is $4.77.
Ouch.
Right. Then you have those foreign transaction fees, or FTFs, sitting at 1 to 3%. And if you have an emergency and need an international wire transfer, you are looking at up to $60.
Yeah, it's a massive hit.
Why are we getting hit from so many angles? Like, what is actually happening behind the scenes when I swipe my debit card in Paris?
Well, if we connect this to the bigger picture, you have to look at how international transactions are routed. When you swipe that card in Paris, your home bank back in the U.S. has to communicate with the French Merchants Bank.
Okay.
And that's usually routed through a massive network like Visa or MasterCard.
Right.
That network acts as a toll bridge, essentially. And they take a cut, usually around 1%, just for facilitating the communication across different currencies.
Just for the communication part.
Exactly. But then your home bank sees that international ping, and they decide to tack on their own foreign transaction surcharge, which is often another 1 or 2% on top of that.
Wow.
They frame it as, the cost of doing complex currency conversion. But in the modern digital age, it is essentially just a highly profitable tax on your vacation.
So they are literally charging me for a digital math problem they solved in a microsecond.
Precisely. That's exactly what it is. And the real danger here is the compounding nature of these fees. I mean, human brains are remarkably bad at calculating cumulative small losses.
Oh, for sure. We just ignore the small stuff.
Right. When you buy a coffee and you get hit with a 3% fee, you barely notice it. It's pennies. But scale that up. You take a 2-week trip. You are tapping that card for every meal, every metro ticket, every little souvenir.
Yeah.
You are effectively adding a 3% tax to your entire vacation budget. Now, layer the ATM fees on top of that. Let's say you hit the ATM 5 times during that trip to get cash. You get slapped with that home bank fee of nearly $5, plus whatever the local French ATM decides to charge you for using their physical machine.
It's like death by 1,000 cuts.
It really is. By the time you fly home, those invisible fees can easily equal the cost of a phenomenal dinner out or an entire extra night in a hostel. They are literally stealing experiences from you.
Okay, wait. Let me push back on this a little bit.
Yeah.
If ATM fees are the enemy here, and they're draining my travel fund one withdrawal at a time,
Yeah.
shouldn't my strategy just be to take out one massive pile of cash the second I land? Just go to the airport ATM once, take out like 800 euros, pay the $4, and just be done with it for the whole trip.
You know, it is a totally logical thought process, and honestly, it's how a lot of people used to travel. But doing that today introduces a severe security risk.
Because of pickpockets and stuff.
Exactly. You really do not want to be navigating a crowded, unfamiliar tourist center, knowing you have a massive portion of your trip's entire budget just sitting in your front pocket.
Yeah.
You're basically trading financial leakage for physical vulnerability.
Yeah, that makes sense.
If you lose that wallet, your trip is severely compromised.
That is fair. I mean, losing $4 hurts, but losing $800 completely ruins the vacation.
Exactly.
So what is the alternative then? How do I get cash without bleeding out in fees?
You shift to a bank that completely absorbs the cost of the global ATM network for you.
Wait, they absorb it?
Yeah. There are a few heavy hitters in the sources that explicitly reimburse ATM fees worldwide. So for 2026, Charles Schwab, Alliant Credit Union, and USAA are the prime examples here.
Okay.
The mechanism here is brilliant for the consumer. When you use, say, a Schwab debit card at a random ATM in Rome, that local machine will still flash a warning saying, this transaction will cost you €5.
The dreaded warning screen.
Right, the screen we all hate. But you hit accept anyway. Schwab lets the charge go through, but at the end of the month, they automatically credit your account for every single one of those third-party fees.
Hold on. Why would a bank do that? If the international network charges a toll and the local machine charges a fee and Schwab is refunding me, Schwab is losing money every time I get cash.
They absolutely are losing money on that specific transaction.
Then why do it?
It is a calculated customer acquisition strategy. Institutions like Schwab are traditionally investment brokerages, right? They offer these incredible fee-free checking accounts as a loss leader.
Ah, I see.
They are hoping that if you trust them with your checking account on your travels, you will eventually trust them with your much larger investment portfolio down the line. So you as the traveler get to take advantage of their corporate strategy.
That is brilliant.
It is. You get the safety of pulling out just $20 for the afternoon, knowing you won't be penalized for making multiple small withdrawals throughout your trip.
That completely shifts the strategy. You get the safety of carrying minimal cash without the death by 1,000 cuts fee penalty. But what if someone doesn't want to open a whole new brokerage account just for ATM access? Are there workarounds to bypass the ATM infrastructure entirely?
Yes, there are, actually. And the simplest workaround relies on avoiding the ATM networks altogether by using local grocery stores.
Really? Like a cash back thing?
Exactly. When you are buying a bottle of water or a snack at a larger international supermarket, you can often use your debit card and ask for cash back at the register.
Oh, wow.
Because it is processed as a standard point-of-sale retail purchase rather than an ATM withdrawal, you bypass the ATM surcharge completely.
That grocery store trick is brilliant. It turns every supermarket into a fee-free ATM. Okay, here's where it gets really interesting. We have secured the perimeter against fees. The leak is plugged.
The suitcase is patched.
The suitcase is patched. Now, how do we make our accounts work for us? Because I think a lot of us view credit cards as the velvet rope to the VIP travel section. You know, you get the premium card, you get the lounge access, you get the points.
Right, the glamorous side of travel banking.
Yeah, but checking and savings accounts are usually just, well, boring places where money sits. How can an everyday checking account actually help fund the trip?
It starts by rethinking what your deposited money is actually doing. The banking landscape is incredibly competitive right now. I mean, banks need your deposits so they have capital to lend out for mortgages and auto loans.
Right.
To get your money, they are offering much higher yields and entirely new reward structures. We should also note that having a good exchange rate matters. Local banks, Chase and Bank of America, often offer rates close to the market rate, though you should always cross-check against search engines.
Always good advice.
But let's look at the foundation first. High-yield savings accounts. Right now, you can comfortably find accounts offering around a 4% annual percentage yield, or APY.
Let's break that down for the listener, because APY can sound like, just banking jargon.
Yeah.
What does 4% actually mean for my travel budget in practical terms?
Good point. Let's say you have a dedicated travel fund, and you have managed to save $5,000 for a big trip you're taking next year.
Okay, $5,000.
If you keep that in a traditional checking account at a brick-and-mortar bank, it earns basically zero. It just sits there losing value to inflation.
Right, doing nothing.
But if you move that $5,000 into a high-yield savings account at 4% APY, the bank is paying you roughly $200 over the course of that year simply for keeping your money with them.
$200.
Exactly. That $200 is a couple of nights in a nice hotel or a round-trip domestic flight generated entirely passively.
And it isn't just the interest rate that matters. I was really fascinated by the behavioral psychology side of this. In the deep dive sources, we are looking at institutions like Ally Bank, and they have this feature called buckets within their savings accounts.
Yes. The buckets concept is a perfect example of behavioral economics at work.
How so?
Well, traditionally, economics views money as fungible. That means a dollar is a dollar, and it does not matter if it is in your checking account, under your mattress, or in a savings account. It all has the exact same value.
Logically, sure.
But human beings absolutely do not think that way. We use what is called mental accounting. We categorize our money based on its origin or its intended use.
Right, like how finding a $20 bill in an old winter coat feels like free money that you can blow on a fancy lunch, even though it's the exact same $20 you already earned.
Precisely. It is totally illogical, but it is how we are wired.
Right.
And the buckets feature digitalizes that mental accounting.
Oh, okay.
When you have a generic savings account with $10,000 in it, tossing another $50 in feels abstract. It is just a drop in the ocean. It doesn't trigger any dopamine.
It's just a number getting slightly bigger.
Exactly. But a digital bucket allows you to carve out a subsection of that account and physically label it Tokyo 2026. Suddenly, that money has a distinct, vivid purpose.
Oh, I see.
Putting $50 into that bucket feels like you are actively buying a piece of your vacation. It turns an abstract financial chore into a concrete, rewarding action, which dramatically increases your motivation to keep saving.
It changes the entire narrative in your head. It's no longer, I have to deprive myself of a coffee to save money. It's, I am trading this coffee for a sushi dinner in Tokyo.
Exactly. It's incredibly powerful.
But the rewards aren't just limited to savings accounts, right? Like, there are debit cards out there now that act almost like premium credit cards.
Oh, yeah. We are seeing an incredible evolution in debit rewards. For example, Quonic Bank offers 1% cash back on eligible debit card purchases.
On a debit card?
Yeah, and American Express National Bank has a rewards checking account that actually earns Amex points on debit purchases.
That's wild.
But perhaps the most interesting mechanism is Basque Bank's mileage savings account.
Yes. Let's talk about Basque Bank because this completely flipped my understanding of how miles are generated. They give you 2 American Airlines Advantage miles for every dollar you save annually. You aren't earning miles by spending money, you are earning miles by hoarding money. How is that mathematically possible for the bank?
It comes back to how banks make money. When you deposit money into Basque Bank, they take those funds and lend them out at a higher interest rate, say 7 or 8%.
Right, standard banking.
Normally, a high-yield savings account would take a portion of those profits and pay you that 4% APY in cash we talked about earlier. But Basque Bank does something different.
What do they do?
They take the interest your money generated, and they use it to buy frequent flyer miles in massive wholesale bulk from American Airlines.
Oh,
Because they buy in such volume, they get the miles for a fraction of a cent. They then pass those miles on to you instead of cash interest. It is an incredibly efficient system if your primary goal is travel.
that is fascinating. The bank is essentially acting as a massive currency exchange, trading the interest your money earned for wholesale airline miles.
Exactly.
Okay, but while we are relying on all these modern banking features, there is a very unglamorous side to travel banking that we have to address. What happens when things go wrong?
Ah, yes. You are talking about 247 customer support.
Exactly. The data highlights institutions like Ally and American Express specifically for this. Because if you are halfway across the world operating on a 12-hour time difference and your card gets swallowed by a sketchy ATM machine
A total nightmare.
or flagged for fraud because you bought train tickets in 3 different countries in one day, you just cannot afford to wait for business hours back in your home time zone.
No, you can't. It is the difference between a minor hiccup and a ruined trip. The anxiety of those inevitable, middle-of-the-night panic moments abroad is vastly reduced when you know a human being is available via the bank's app or a toll-free number the absolute second you need them.
It's essential.
If your bank only operates from 9 a.m. to 5 p.m. Eastern Time, they are actively working against you when you are in Asia or Europe.
So what does this all mean when it's time to actually pick an account? Let's take all this mechanical knowledge and put it into practice. For 2026, we have a roster of heavyweights, but it really comes down to matching the tool to the specific trip.
Definitely.
Instead of just listing off features, let me pitch a few travel scenarios to you, and you tell me what the listener should pack in their wallet.
Let's do it. I love this.
Scenario 1. I am doing a massive, fast-paced trip across multiple borders. I am starting in Scandinavia, taking a train down through Europe to Paris, and then flying to Tokyo. I am going to be jumping between Swedish krona, euros, and Japanese yen almost daily.
Okay, lots of currencies.
And crucially, I'm spending most of my time in cashless societies where I am just tapping my card for everything. What is my weapon of choice?
For that specific itinerary, you want Revolut or Wise?
Only those two.
These are designed explicitly for the multi-currency globetrotter. For instance, Revolut is a prepaid debit that supports over 25 currencies with no FTFs, and it even includes lounge access and insurance.
That sounds perfect.
But let's look at how Wise works formerly TransferWise, because their mechanism is revolutionary. Traditionally, if you want to convert dollars to euros, it goes through that international SWIFT network we discussed, taking days and incurring hidden markup fees on the exchange rate.
Right.
Wise bypasses that entirely.
Wait, how do they bypass the global wire network?
By essentially maintaining massive, localized pools of currency in different countries. When you tell the Wise app to convert 100 US dollars to euros, your dollars never actually cross the ocean.
They don't.
Nope. Wise takes your $100 and deposits it into their local US-based account. Then, they instantly instruct their European-based account to release the equivalent euros to you.
Oh, that is so smart.
It is essentially two separate domestic transfers happening simultaneously. Because the money never actually crosses a border via the traditional banking infrastructure, Wise avoids the massive network fees. And they offer free ATMs up to $100 a month, then it's 2%.
And they pass those savings on to the consumer by offering what's called the mid-market exchange rate, which, for you, the listener, is basically the wholesale price of money.
Exactly.
It's the rate banks use when they trade with each other, before they slap a retail markup on it for normal consumers.
What's fascinating here is how behavioral economics plays into the destination. So for your Scandinavia to Tokyo scenario, where you are making dozens of small tap-to-pay digital transactions in different currencies, Revolut or Wise ensures you are getting that wholesale exchange rate on every single coffee and train ticket without paying a foreign transaction fee.
Okay, scenario 2. I am not going to Scandinavia. I am backpacking through the Andes, or I am navigating the street food markets of Bangkok.
Okay, a very different vibe.
Right. I am going to places where cash is absolute king. You cannot tap an Apple Watch at a remote fruit stall in rural Thailand. I am going to need to pull local currency constantly.
In that environment, the multi-currency digital tools aren't going to help you if they charge you to access hard cash. This is where you absolutely must carry the Charles Schwab Bank Investor Checking or the Fidelity Cash Management Account.
Because of the ATMs.
Exactly. As we discussed, Schwab has unlimited worldwide ATM reimbursements and no monthly fees, plus roadside assistance. Fidelity has the Visa Plus and Star Network worldwide ATM reimbursements. They are the gold standard.
Right.
If you are in Thailand, the local ATM fee can be almost $7 US per withdrawal. If you take out cash 10 times, that is $70 just in local fees, not counting your home bank's fees. Schwab and Fidelity wipe all of that out. They are your shield against the global ATM infrastructure.
Okay, last scenario. I am not a digital nomad, and I am not backpacking through the Andes. I am just someone who takes maybe one international vacation a year.
The casual traveler.
Yeah. I don't want to open a brokerage account with Schwab, and I don't need to hold 25 currencies in a Revolut app. I just want a simple US-based checking account that won't punish me when I go to Mexico for a week.
For the casual traveler who wants low maintenance, Chime is a fantastic option. It is a US-only debit. It's incredibly easy to set up. There are absolutely no monthly maintenance fees. And crucially, they do not charge any foreign transaction fees when you swipe the card.
Awesome.
Now, the trade-off is that if you do use an ATM abroad with Chime, it costs $2.50 plus whatever the local operator charges. They do not reimburse you like Schwab does.
Right, so not great for heavy cash users.
Exactly. But if you are mainly using your card to pay for things at a resort or restaurants and you only hit the ATM once, it is a perfectly balanced, low-stress option. Good for occasional trips.
It really is about tailoring the account to the climate you're stepping into. But regardless of which of those accounts you choose, there's one non-negotiable feature for 2026 that applies to everyone, everywhere: digital security.
Absolutely. The era of just calling your bank to put a travel alert on your card is over. You need proactive digital defense, and the most powerful tool for that right now is the virtual card.
Let's break down the mechanics of a virtual card. It is essentially a disposable, digital-only card number that is linked to your real account, right?
Yes.
How does that actually protect me if I'm trying to book a sketchy regional bus ticket online in a foreign country?
It uses a process called tokenization. When you go into your bank's app and generate a virtual card, it creates a unique 16-digit number, expiration date, and security code. You type that information into the sketchy bus company's website, the payment processes, and then you immediately delete that virtual card in your app.
So even if that bus company's servers are incredibly unsecure and get hacked by a cyber syndicate 3 months later.
The hackers steal a sequence of numbers that no longer exists.
Yeah.
They get a dead end. Your actual physical debit card number, the one tied directly to your life savings, was never exposed to the internet.
That is incredible peace of mind.
Mm.
And it pairs perfectly with instant account freezing too.
Oh, definitely.
If you drop your physical card in the back of a taxi, you don't have to panic, navigate an international phone menu, and wait on hold for 20 minutes while someone drains your account. You just open your app, hit a toggle switch, and the card is dead until you find it at the bottom of your backpack.
It stops a minor inconvenience from mutating into a trip-ruining financial disaster, which is really the overarching theme of this entire discussion. I mean, banking admin is inherently boring. Nobody wants to spend their Tuesday evening researching exchange rate markups and tokenization when they could be looking at travel blogs and planning their itinerary.
True.
But taking just 1 hour to audit your wallet and set up the right checking or savings account before you leave buys you total freedom on the ground.
It is an hour of work for weeks of financial freedom.
Okay.
So to bring this all together and summarize the core checklist for you, the listener, before you stamp your passport, you are hunting down accounts with 0 foreign transaction fees.
Number one priority.
If you are going somewhere cash-heavy, you are demanding worldwide ATM reimbursements. You are making sure your bank offers favorable exchange rates, ideally mid-market without hidden retail markups. And you absolutely must look for robust digital security, like virtual cards and instant freezing backed up by 247 human support.
That checklist ensures that your travel budget stays your travel budget.
Exactly.
But, looking at all the rapid mechanical advancements in travel banking we've discussed today, the way apps can instantly toggle between currencies and generate disposable card numbers on the fly.
Yeah.
This raises an important question. If the digital architecture is getting this incredibly seamless where your phone can instantly route local currencies bypassing the entire global wire network,
Right.
will the next era of travel involve leaving our physical wallets at home entirely? Like, what happens to the global travel experience when our phones become the ultimate single-use, borderless currency exchanges?
That is a wild thought. Walking off a plane in a totally new country, bypassing the currency exchange desk, bypassing the ATM, with nothing but your phone, seamlessly integrated into the local economy. It fundamentally changes the physical reality of traveling.
It really does.
It is definitely something to think about the next time you are organizing your documents for a flight. Thank you for joining us on this deep dive into optimizing your travel banking. We hope this empowers you to look closely at your own accounts, demand better features, and keep your hard-earned money right where it belongs. So the next time you find yourself at that cash-only gelato stand in Rome, you won't be dealing with a slow leak in your suitcase. You'll just be enjoying the pistachio. Safe travels, and we will catch you on the next deep dive.